Welcome back. Continuing with corporate conversations, South Indian Bank is the next management that joins us on the show. The bank's loan book was up 5% sequentially. Asset quality also improved during the quarter. We are being joined by Mr. P.R. Seshadri, the Managing Director and CEO at South Indian Bank. Mr. Seshadri, good morning. Thank you for joining in. Start off with their loan growth as well. It was back to a healthy trend on a sequential basis, is up 5%. Now, what is the kind of growth that you're expecting for the rest of at least for the last quarter and the full year? And B, how much of this came from gold loans, and is that trend likely to continue as well?
Thank you very much for having me on the show. Our growth was quite good last quarter, and we think that this will continue into this quarter. And we think that initially we've been indicating that we wanted growth north of 12% year on year, and we continue to stick with that. And we think that we will be north of 12% as we complete this year as well. Gold was a significant contributor to the growth. In addition to gold, we also had growth in MSME and retail. The corporate book was largely flat as far as we were concerned. There was some growth in our transaction banking side, but the nature of the growth was such that the sequential revenue growth, net interest income growth, Q3 over Q2 was 9%. So we are reasonably happy with what has happened during the quarter.
Mr. Seshadri, with the kind of credit growth expectations you have for the year, I just quickly wanted to understand, we've seen a whole bunch of private, banks, NBFCs go ahead, raise strategic capital. Some have even tapped private equity players. Any such plans for South Indian Bank?
Ma'am, we are adequately capitalized at this point in time. Our CRAR is about 17.84%. Yeah. So at this juncture, we're not really looking at raising capital. We've not had any conversations on that front. We are always open to look at capital options so that we remain adequately capitalized. But there is no material conversation that is taking place at this point.
I see. Mr. Seshadri, your NIMs have shown some, they're flattish actually, 2.86 is where you're at. Just give us a sense of, going ahead, will you be able to defend these kind of levels? Because in this quarter, at least there was support from the CRR cut, despite that repo rate cut from the RBI. But will you have room for further expansion from these levels?
We expanded NIMs by 6 basis points sequentially. And we think that we should be able to defend this NIM as we go forward. We give effect to a repo rate cut on a T+1 basis. So therefore, if repo were to change today, we will give effect to it for our customers tomorrow. So during the last quarter, we've given effect to the 25 basis point change. And unless there is a very significant change in repo rates again, we think that we should be able to keep our margins relatively intact, essentially because of the fact that we do have significant repricing of the deposit base as well. There may be some downward pressure, but we think that we can manage it.
Okay, that is assuming that there are no more rate cuts from RBI. We'll have to see how that plays out. But your asset quality as well. Your credit cost is inched up a bit by 6 basis points from the previous quarter. It's still low. But, from your legacy book as well, do you continue to see slippages? When do you see that normalizing?
Our slippages for the quarter were at 16 basis points. So on an annualized basis, that is 64 basis points. And I think those are historical lows for us. So the historical book is no longer bleeding the way it used to in the past. Majority of the losses have come from the new book now. And these are levels at which we are relatively comfortable. So the trend line on slippages have been very, very positive, and we are hoping that they will stay in that same direction as we go forward.
All right, we take that point. I just wanted to understand, Mr. Seshadri, the last time you joined us, you did say that you are expecting the MSME book to grow more than 20% in FY26. At the same time, you were looking to reduce your corporate book exposure as well. On those parameters, where do you stand right now? And what's your target, early target if you can, for the next financial year?
So MSME growth for the year so far has been approximately 14% if you include the loan against properties business. We think that we will end stronger than that because Q4 is traditionally the part of the year when businesses borrow the most. Therefore, we think that we do have a shot of getting to 20% on a year-on-year basis. With respect to the restructuring of the balance sheet, corporate has remained flat. If you include corporate and the transaction banking book, it has remained flat at 40%. But there's been very significant growth on the retail and MSME together. So that part of what we are trying to do continues, and we are relatively happy with the progress that we've made so far.
Okay, but, on the MSME book specifically, sir, how much of it is really exposed to, players that have a significant exposure to the US market? And I'm asking that in light of this uncertainty that looms about the tariff deal with the US. So how much of your book is exposed, and to what extent are you making provisions in case the deal is delayed further and any stress emerges?
As of this moment, we're not seeing any stress there. And we do have reasonable exposure to folks who have export to the US because we are based out of Kerala, and Tirupur is just across the border from where we are located, which is a very large market for exports into the United States. Right now, we are not seeing any stress. We are hopeful that deal emerges. We are not even seeing increased utilization levels on our limits thus far. But however, we are trying to ensure that the blow is softened by ensuring that the new advances or the new schemes that the government of India has rolled out in terms of increased capital availability for our customers is implemented, so that in the event there is some stress, they have the means to actually ensure that they continue to survive and thrive as they go forward.
All right, Mr. Seshadri, we leave it at that. Thanks very much for joining us here today, and we look forward to speaking to you again after your fourth quarter numbers.